Well, so many investors and startups turn to investment platform Wholesale Investor to help raise capital, but recently it got its first-hand experience of the process, raising millions to support its own growth. Having just released a white paper on raising capital, and to share his experiences and wisdom, founder Steve Torso joins us now. Steve, a very warm welcome to you. Thanks for coming in.
Thanks, Maura. Thanks, Simon.
Great to have you in, Steve. Congrats on your raise.
Thank you.
Tell us about that and tell us about the lessons you learnt being on the other side of the fence.
So, for me, like I said, from the outside, it would look like it was a fairly quick process. Because effectively it looked like sort of a 4 to 6 week process. But really, I've been working up to this for the last sort of 12 to 18 months as far as the way we've been having discussions. And from my own process, I think the best thing I could say for founders is you need to have as many conversations as possible before you actually before you launch into the process. And the other benefit I had was having data and having analytics for the actual cap raise makes such a big difference.
What about on the flip side? Did anything come to light that you sort of weren't aware of or didn't expect to happen, took you by surprise?
Yeah, one of the things that really became obvious for me is in our platform that we use for raising money, there's an analytics dashboard. And what ended up is basically the top 12 of 13 people in my analytics dashboard ended up becoming shareholders. So it sort of proved a bit of a thesis that we had around that there is a relationship between engagement and activity that translates into investment, which I found really interesting because often capital raising feels more like an art than like a science, and we obviously want to explore the potential of the science side.
So you just brought out a white paper, raising
Yes.
capital in a pandemic.
Yes.
Weighty
At the time
topic.
of doing my own capital raise, yes.
Yeah, absolutely. Past, present, future of capital raising. Just take us through a few of the key points.
So if you look at the past, a lot of it was driven around personal relationships, and that's where a lot of the focus has actually been. And also, whilst there has been investment going into technology businesses, it's really, if you look at where the focus is right now, investors are really looking at businesses that have not only survived, but also been able to thrive in this period. So the outcome that we got to as far as what does the future look like is for companies that are thinking about raising capital, one, understanding it is going to be a lot more challenging than it was sort of 6 months to 12 months ago. Two, that they really need to focus on some internal factors with the company before actually going to that capital raise. So whether it be looking at other financing options, maybe making adjustments to their business model potentially. Those internal factors, and then the external factor is when they do go to raise capital, understand that investors they do have a lot more options at the moment than what they previously did. And it's a competition for money.
And we spoke earlier in the program about the fact that we're seeing right now maybe not as many investors, but those who are investing a little bit more. Is that here to stay?
Correct. At least for the next 6 to 12 months. In fact, I'll add to that. Not only are they investing a bit more, but they're actually looking for ways to be active with their investment. So
they've got the money to burn, right? So
correct. It's not even money. Some also
don't want to burn it. I reckon it's.
They definitely don't want to burn it, but they actually want to add more value. So if I was to highlight my own experience, a lot of the investors that came into our cap raise are actually looking to add value in different ways. Some are just really enjoy what we're doing and they want to be passive and watch us to continue to sort of accelerate. But others are looking to add value in different ways, whether it be helping go into new markets, helping generate additional revenue, etc. So I think for companies, they just need to be aware that investors are looking to be more active, typically now with cap raise, and they do have the potential to negotiate.
You cited the companies that raised during the last sort of global financial crisis, the hit there and the opportunity that came out of that.
Yes.
The Squares, the Instagrams, the Pinterest, the
Yes.
Slacks, all of that. How do you see this moment and this opportunity? Are you sort of optimistic that we're going to see a similar circumstance?
Absolutely.
Yeah.
I just don't think there's ever been a period in history where some of the most amazing, most incredible companies have not come out of some of the most challenging situations. And I imagine if you think about it from a high net worth perspective, and for a lot of the funds, ask any fund, they're typically investing into one of two things. This is the VCs. They're investing into their existing portfolio companies, or they've just increased the bar higher as far as what they'll potentially invest into going forward. So absolutely there'll be some star performers that come out of this marketplace.
And what about fund flows? Where are you seeing the money coming from into some of these VCs? And
Well, not so much the money that we're seeing is going into private companies. So basically, we are still seeing the most active ecosystem amongst the high net worth. For me, they're the ones that have been most proactive, and also we're seeing groups that are represented in Australia but have access to international investment. We're also seeing them be a lot more active in this period as well, and especially if there's let's call it, if there's an opportunity in which they can sort of capitalise on at this time. That's what we're seeing.
One of the things, I know that Canberra's been looking at share schemes for employees at the moment, and I know it's a little bit off to the side, but I just wondered, do you have a view on this? Because it's a really important part of how companies are putting themselves together, how they're sharing the value in the business with their employees. What's your take on all of that? Have you had a chance to sort of look at
I know we went through the process. It's actually really frustrating. Like if you're as a founder going around trying to figure out how you want to go about it. Like we had quotes from people trying to charge us anywhere from 25 to 40K to try and help us understand what options were available and then execute. And so for me, I think if we can simplify this process, you'll find it'll be easier to attract more talent coming into startups, because sometimes they will be paying less salaries than what sort of larger companies will. But more than that, they'll be willing to stay in for companies a bit longer because there's some equity upside in them for that. And then what typically happens is, you see in the US, other opportunities will be created off the back of that. And in fact, a lot of the secondary sales market come from employees of, previously were Facebook and so forth. And the market that I'd love to see thrive in Australia is actually the secondary sales marketplace, which is almost non-existent at the moment.
Steve Torso from Wholesale Investor, great to have you in. We talked about a lot of the macro stuff today. We must get you back in to talk about the companies that you're involved in somewhere down the track.
Thank you, Simon. We'll do.
Great.
Thanks, Maura.
Thanks so much.